Hey, what's up traders, the FX Hunter with another video, and right now it's going to be analysis of the Aussie Kiwi, and we will look to the how to apply the sequence of the time frames and the institutional levels to find out the trade and try to decode what's going on the markets. First of all, if you are watching this video so first time, please subscribe and hit the like button if you like it. And I'm sorry, I'm not native English speaker, so maybe sometimes you will not understand me correctly, but I'm trying to do my best. So yeah, as well, this all analysis is based on my indicators which we have created with my very great friend and coder. And if you like more ideas like this, I share every day 4 of them on the trading view, and I'm making one video like this on the YouTube. So if you want to, I'll be glad if you follow, and it helps you in the trading. Okay, so let's start with the analysis. This is the monthly on the Aussie Kiwi, weekly, daily, and the 4 hours, right? So we need to right now know in the bigger picture where the market is. This is what I do always. So I go to the monthly and I'm looking at it like that. So overall, we are quite in the lower part of the overall range, right? As well, this is quite important information. We have made the lowest historical low on this instrument, from where the price has moved up and break through the latest high, right? So as well, right now we can see that price is actually retracing back into the previous accumulation phase, where was the price ranging and made this buying dip, right? So probably who made this? Of course, it was not because I bought or you bought, but because the institution bought. So here would be some institutional level, right? Let's look at it by our institutional level scanner. So I will bring this click to this TA, which will bring this in analysis, technical analysis, this institutional level. So we are seeing here is the institutional level. Why institutional level? Because if you know the basics about the market structure, we know that we have some impulse, accumulation phase, impulse, accumulation phase, impulse. Then it could be distribution, that they taking out of the longs. Price could drop down, you know, like this. So this is basically the accumulation phases or the distribution phases, and that's where the institutions trading. And what they're basically doing is that they accumulate or distribute some positions, then they want to bring the price back and to fill up rest of the orders, and then continue with the price in the direction they want to, right? So that's basically what happening in here. They've been doing the accumulation, then the price moved up, then they bring it back, and they filling more orders, right? So right now here on this monthly, we can see that they basically made this and they retested, and price is about to go higher, right? So on the monthly, we can assume that it's a bullish market. Let's go to the weekly, and what we are seeing here. So we are actually looking to the same chart, only the different, slightly different fractal, right? So what's great on this tool is that I can bring this monthly or weekly levels, right? We are now looking to the weekly, and I of course want to see the weekly level, but just to make sure where the price actually bounced, we can make a projection of this previous monthly levels, right? So here is this monthly, and we are seeing this bounce in here, right? So what happened? We had this accumulation phase, then the price dipped into the liquidity. How we know it's liquidity? Because where's most likely liquidity? Below the latest lows, right? And I have the indicator for that as well. If I click to these high lows, it will project me this previous lows and highs, right? So what we are seeing in here, that banks actually been doing accumulation phase, then they make this fake out when they cleared all these potential stop losses or sucked people to short, and then they move it up, right? It was quite big move. So here is where this accumulation phase started, and price reacted in here. Because why? As they've been doing this, they will most likely manipulating price down, and they've been buying in here. So why the price doesn't go lower? Because they don't want to have their positions in the losing, right? And right now we are, so this was the monthly, so right now we are on this weekly, and what's happening in here? So they reacted here on this previous monthly, they make this again, and again right now on the lower time frame we know that they had their accumulation phase in here. Right now the price is coming into this level, and we will most likely see this, because on the lower time frame we know that they are bullish, they don't want to go lower, right? So that's what we can expect on the weekly. Maybe, of course, nothing is 100% sure. This is the tool which rising my trading edge, and nothing is 100%. You know, if you expect that this is gonna be 100% sure, not always. As you can see here on this monthly, what actually happened, you know, this is Forex. Of course we had the level in here, and you can see what happened, right? So always you must use the stop loss and be careful with trading. So right now we are on the daily, and let's bring this level. So here is this level where actually reacted the price in the previous time, right? So let's bring it here, and if you look at it like this, so yeah, here is this monthly reaction. So price been accumulating on the weekly, on the daily, price moved up into the previous weekly level where price bounced down, and now we are coming back into the weekly, and let's bring the daily. It's actually nested in here, right? So what probably could happen right now, we are seeing that here is the nice pin bar being created, and tomorrow after this pin bar is created, the people will enter, of course, the long, right? So then the price could drop lower exactly into this lowest point of this accumulation phase, and we might expect the bounce here. That's based on the technical analysis. We will analyze the order flow later as well. On the 4 hours time frame, if you look at it like this, of course, same on the lower time frame and the fractal of the price. So we can see the price was dropping through all these liquidity zones where the retail traders actually started to buy. They've been mostly buying in here because they expected this as a support. I was actually calling for the correction and the drop lower. However, the price did not retrace back into my level, so I was not in this short, which is a shame, but so I will be looking for the long in here, right? So yeah, that's what we are seeing in here. So right now let's go to analyze the COT data, the order flow, commitment of traders, and try to decode what they are doing. I will hide these I will hide the technical analysis, and I will click into this button volume, and I will bring this confluences of the numbers, I will bring this and I will bring this. I will click on this button, and it's okay. Now I will click into this button, and it will brings me the coefficient, the numbers, which is the simplified, the COT, instead of analyzing the complete data. Of course, on my website you can see this data for the Aussie and the Kiwi, and you can compare them. So what we are seeing in here is that basically the banks on the Aussie, they have reached their maximum positions on the longs. Then they start to take out the profits. Now we are seeing that they bring them back again, and so it was bullish, bearish. Now it's slightly bullish, and it dropped again, minus 4K right in the previous week. Kiwi, very similar scenario. We are seeing very bullish, slightly bullish, a little bit more bullish. So here was actually the 70% extreme positions. Now they started to take out some profits. This week the Kiwi has made the move. It's of course the data from the previous Tuesday, so this is not include, right? But what we can see if we compare actually this Aussie and Kiwi, right? These numbers are actually the coefficient of these two pairs together, right? So what we are seeing in here is that we can actually see where the data was, when the data was released, and what was the coefficient. So let's look what was happening in here to examine how it works actually, right? So in here we can see that the banks actually started to take out the profits, right? So we are seeing -4, here is +2, so they added some longs, but then price start to drops, and here we are seeing the big sign of the potential short, right? The -10, they closed a lot of positions in here, and then the price started to drop, and they've been closing. This was always the bearish, and you should not be thinking about the buying until we have seen this. We have seen this +5, right? So in here, in this period, they actually started to build some long positions, or they probably closed the shorts. They closed the shorts, so it giving us this positive coefficient, right? What happened next? They probably drop at it a bit lower. Into where? Into the monthly level, right? So what we are seeing next in this monthly level, we can see that actually from this -5, I can leave this monthly level in here. So from this -5, next week they reported +1, right? So in this period, in these 5 trading days, from -5 to the +1, which is actually +4, right? We must think about it like this way. So it's +4, then this is another +4, another 4, right? Then we have the drop, and now here was actually the daily level, if I remember well. Let's look at this. Yes, so here was the daily level, right? So now you can think how if this daily level will be shorting, or if this daily level will be broken up, right? So what we are seeing in here, we can see that they reported -2, 4 -2, so it might start to look for the shorts, but then the price came up, and the next week in here we are getting the number +4. We are getting the number +4 in here. So what happened? Extension up into this is the daily level, but let me hide this daily level, and I will bring the weekly, right? And this is what we want to look for. We want to look for the long from the monthly level to the weekly level, right? To the weekly. Now we are going from the weekly to the weekly, and the monthly is already actually in the control, so it does not have to drop back into here. So what we as well know, that right now we look for the positions in here. So they bring it up, forward, and then you can see how they reduce it, right? So they go from 4 to the 2, which is -2, and -3, which is -5. So we can see in here, while we are in the weekly level, big positions closing, right? Then from the -3 to the 0, and then it's a 0, and then we don't have a data for this. But we know that from the -3 to the 0, it's actually +3, right? Because you must bring the positions to make it from the negative to the positive. So it's +3, and we don't have right now the data for this. So we are on the weekly level, close to it. Just a little bit below that is a daily, and as well here is a 4 hours. So in here, where was this previous accumulation pace, where the banks, we can see that they bought actually quite heavily in here, right, in the monthly level. So we are testing this right now, and we are here, and we know that many people is in the longs, they are trapped, and this is what's happening in here is this I would call this like a divergence. So let's go to the lower time frame. Let's go to the 1 hour. And what's going on in here? Look, 94% people in the longs, okay, but 6% in the shorts. But what's happening? We can see how the shorts been actually they've been dropping, so more people start to buy, and we can see how these longs actually were growing. And right now, as they make this extension down, look how these longs actually how was it? So 9, the price is dropping to 11, so people starting to short. Actually the people starting to short, we can see that it's actually growing. You can see right from here, people shorting even more, 13, 14. Now the shorts are closed. So what I'm expecting can happen in here is, I don't like to trade any formations, I like to use them for the manipulation. So what we're gonna see in here probably will be the pin bar today, right? But the price did not reach the level. So this pin bar, if it closes like this, tomorrow you can expect the price will drop lower into these levels. And in here, more people will start to short this breakout, and when the people will be shorting into the levels, then we could see the long. So I will definitely start to buy the long position in here, and will expect the price to move higher. Okay, my friends, I'm sorry the end was a little bit confusing. It's not easy to explain what I think, but I hope it might help. So we are looking for the levels which are in the control. So on the, again, just to repeat, monthly is in the control, weekly almost touched. Here is a daily 4 hours, and we could expect the bounce, right? So we will go from the weekly to the daily level if we want to have some like a nice target. So we can go from the weekly to the daily. Let me break this weekly. So it could be like this, right? And it can happen because even if the price move in here, those 94% who are in the long trade will not be still in the profit, because here is their average price based on the MyFX book indicator. All right, bye bye.